Strong loan growth, higher yields and lower credit cost ensured that FY23 was the most profitable year for India's banking sector. The combined profits of PSU banks and private banks crossed 2.3 lakh crore rupees, and as banks saw blockbuster growth, asset quality did not suffer. In fact, asset quality was the best that we've seen in more than 7 years. Slippages were down more than 26%. The outlook for the financial year is good, even though margins are likely to decline due to rising cost of funds. Loan growth is expected to moderate but remain in double digits. Amidst all of this euphoria came a warning from the RBI governor. I quote, "Bad loans are made in good times." Today's monetary policy was also an unexpectedly hawkish one, with the governor asserting that there will be no compromise on the 4% inflation target. This effectively could see us hold on rates, or at least hopes of a rate cut in 2023. So what is the road ahead for banks in India's financial sector? Joining me on the PwC and CNBC-TV18 Presents CEO Dialogue is a stellar cast, starting with Ashwani Kumar Tiwari, the Managing Director of State Bank of India. Also with us, Zareen Daruwala, the Cluster CEO of India and South Asia at Standard Chartered Bank. Kaushik Sharparia, CEO of Deutsche Bank Group India. Govind Singh, MD and CEO of Utkarsh Small Finance Bank. Gayatri Parthasarathy, PwC India Financial Sector Leader and Global Financial Sector Technology Leader. Sanjeev Krishnan, Chairman of PwC in India. Prashant Kumar, the Managing Director and CEO of Yes Bank. Rajiv Sabarwal, the Managing Director and CEO of Tata Capital. And J. Venkatramu, the MD and CEO of India Post Payments Bank. Ladies and gentlemen, what a stellar cast we have today to kickstart the CNBC TV18 PwC sector dialogue with the focus on banking. Before I get down to what we can expect in terms of opportunities, in terms of challenges for the banking sector, a quick show of hands, a quick poll. By coincidence, we've had the MPC deliver its monetary policy today, and as was expected, there is no change in rates and there is no change in stance. On the back of the commentary that's come in from the MPC and from the RBI governor, show of hands on how many of you believe that we could potentially see a rate cut in this calendar year. Those who believe a rate cut in this calendar year, raise your hands. Okay, that's 5, and the remaining believe, sir, you believe maybe the financial year. So a majority, it's kind of split evenly between whether we're going to see one in this calendar year or in the financial year. And very quickly, Mr. Tiwari, let me address the issue of what we heard from the governor this afternoon, especially on inflation. The forecast still above 5%. A 10 basis point cut there. What's the expectation now in terms of what we could see from the MPC going forward? You'll have to use the mic, sir.
Yeah, thank you. So the governor was very clear that even though the inflation forecast has been reduced by 10 basis points, as you point out, but he says the risks remain in terms of uncertainties in the external environment. And as long as the war in Europe continues, as long as there is pressure on commodities and food prices, largely emanating from external sector, and there is uncertainty around El Nino and the weather forecast, and therefore the impact on food production, he would like to keep the inflation forecast at a slightly elevated level so that there is closer monitoring, there is more dynamic action, and the prospects of a rate cut, if they were, should be tempered down a little so that we are cautious, and then as things improve, maybe perhaps going forward.
Well, I think that certainly has happened. The tempering as far as the mood on potential rate cuts has certainly happened. But Zareen, I want to understand from you, do you take away from the commentary a more hawkish stance than the market was expecting?
Yeah, I would say so. But having said that, it all depends on how the monsoon is. And if we see a good monsoon, then clearly we'll see a little bit of the food inflation, etc., coming off. And hopefully, yeah, then we might see one rate cut by December.
One rate cut by December. So you're in the camp that believes we're likely to see still the possibility of a rate cut in this calendar year. Kaushik?
I think coming out quite clearly, at least the way we see it now, is that the MPC will need to come with a couple of cases where they will probably talk about liquidity to be controlled and let go, to give a sign to the market before they do the rate cut. So I think I'm probably in the camp, like Mr. Tiwari said, probably the financial year,
year.
Not the calendar year, could even slip into April.
Could even slip into April. Yes, some of our respondents to our poll do seem to suggest that as well. Mr. Kumar, what's your expectation?
Well, I think instead of, say, a rate cut, what we need to see how, when the situation is going to improve at the ground. And situation at the ground would be more in terms of the inflation, because they are not going to compromise in terms of inflation going up and there would be rate cut. So I think as long as the inflation would remain elevated, we don't see any possibility of the rate cut. And the inflation would be definitely dependent this time on the monsoon, but also in terms of the supply chain. What happens in the international, say, markets. And if there are, say, recession around the world, if the demands would be low, and there would be issues in terms of raw material prices, and if the inflation is not coming down, I think we don't see the rates cuts coming. So at least not in this calendar year, but hopefully if it starts happening in the financial year, I think that would be very good.
Well, yes, clearly we've seen that switch taking place, and of course the governor also, or actually it was the deputy governor that reiterated the fact that while the RBI or the MPC is not sticking to 4%, they want to be aligned to the 4% inflation target, and that perhaps will drive the trajectory of what the RBI may or may not do going forward. Well, that's it as far as the MPC is concerned, but we are here to talk about the road ahead for India's banking sector. And before I get my panelists in, I am going to toss it across to you, Gayatri, to set the context about what you believe will be the growth drivers, what you believe are likely to be the challenge as well. Gayatri, over to you.
Sure. Thank you, Shireen. Absolutely. And pleasure to be here in this, distinguished, among the distinguished panelists, and a wonderful theme also, right? Banking, in terms of as a sector, definitely makes a huge impact on the country's growth objectives. And if you have to be the third largest economy, right, by 2030, then banking sector plays a huge role, right? From setting the context, right, I would like to cover a few points, right? In terms of overall, I think the sector has been highly resilient, number one, right? I almost call it as a little bit, almost insulated. The insulation is working well, kind of thing, right? And also the profitability has increased in the past few quarters very, very well, right? Which is absolutely positive signs for, looking at the sector from a growth angle and what can be, done. More than anything, of course, also, if you look at in terms of the credit growth, 2022-23, it's been, I would say, pretty high, 15%. And of course, I would call it as in terms of all the scheduled commercial banks, be it public sector banks or private sector banks, the NPA gross or net ratio has been, right, in terms of coming down. As you rightly said in the introduction, right, whether you look at in terms of the low slippage ratio or in terms of, right, the NIM improvements, I think the sector is doing good, right? Digital transformation is all over. It's written all over the country and all over the banking sector. And also in terms of the innovations that's coming across in payments, right? In whether it is UPI, UPI Lite, or anything else that's happening from a fintech ecosystem, etc., all are leading to in terms of how the disruptive technologies can help the banks to further, strengthen and grow, right? That's the kind of I would say from a context on where we are, right? What can be done more or what needs to be done more for next? I would definitely say that we have to reach to the last mile, right? While we are obviously the credit inclusivity that needs to come in, right? In terms of to the bottom of the pyramid, how do we further enhance it? What are the actions that needs to be done? And I'm sure Venkat is giving a big smile on that, right? Absolutely. Not only from him, but up from every angle of it, right? What needs to be done and how can we do? Because at some points in time, you look at India for the growth, you really need, I would call it as rural entrepreneurship that needs to thrive, right? Really, truly speaking. And that is what will make the country, right, in terms of grow fundamentally even more higher. We have people looking at the 30 crores maybe with a lot of obsession, and there is 100 crores to be looked at with even more obsession. That is when they will be looking at it. And also very clearly well-defined, very well customized and well-defined strategy for India and Bharat. I would call it as, right, in terms of two-step kind of an approach that can come up. And of course, usage of, right, I would say again, disrupt through technology. A lot of things through data, right, and data, right, and Gen AI, multiple things that is coming up, and which can be used for the banks. And to me, the most important and maybe one topic which I believe is there in every leader's mind here is talent. The way in which we are growing and the way in which the transformation is happening, the talent that's maybe today will not be the same talent that we will be needing for the future. How would you future-proof it, and what kind of upskilling, cross-skilling, etc. that we really need to bring on, right? Finally, I would call sustainability. Definitely, while all other sectors are focusing on sustainability, right, from maybe multiple things, right, from an ESG, I say government is doing a lot of things. How can banking maybe come up with an integrated strategy on ESG? And would that be feasible? And then what are the steps that can be taken?
Let's address the very first question, which is the resilience that you spoke of. It's not just the resilience of the financial and the banking sector, but it's the resilience of the Indian economy that we've seen, especially through a post-COVID phase. And today the governor alluded to that as well. Rajiv, let's start by talking to you about it. The expectation is 6.5%. That is the estimate that the RBI has put out as well. And there are varying estimates, but all within that ballpark range at this point in time on growth. Now, we're coming off a very strong year for the banking and financial sector. What do you anticipate as far as FY24 is concerned, but also a slightly more longer-term 5-year view?
If you look at the basics, I think a lot of them point to a much, much better future for us. We are a much larger economy. We've got the digital ecosystem working for us. We've seen per capita income growing, and I'm also seeing wealth being distributed in a better way. We've seen the rural economy, it did suffer for some months, but we've seen it coming back. And we're seeing a big thrust for Make in India. I feel manufacturing has the potential to create a lot of jobs too. So if you look at all of these happening, plus so many other external factors, the China Plus One story and so many others, I believe that this year definitely we will see a growth of more than 6.5%. I'm very optimistic.
What's your number?
I feel that we will be somewhere closer to 675 in that range. Because, looking at, you were speaking about interest rates, whether there is an interest rate cut or not, we are already seeing the benefits of lower interest rates. The short-term interest rates are down. The long-term interest rates have also moderated. And where we were expecting interest rates to move up, they've actually come down. So we are in the economy seeing the benefits of that. Whether it translates through a repo rate cut or not, the benefits are accruing.